Yo, what's up, crypto fam? It's your Whiteboard Invest coming at you with another red-hot crypto update. We've got a ton of ground to cover today, so let's dive right in. In today's video, we're going to be talking about, first, Bitcoin demand has considerably slowed down, according to Glassnode report suggests, and President Biden's administration expresses both eagerness and reluctance regarding the FIT21 crypto bill. Meanwhile, we also have Gensler's reaction to FIT21. And then we're going to check out stablecoin developments, geopolitical news affecting crypto world, and Ethereum ETFs. All right, don't waste your time anymore. Buckle up and welcome on board, my friends. Firstly, Glassnode, a well-known on-chain analytics firm, just dropped its latest weekly report, and it looks like demand for Bitcoin has slowed down recently. They've been looking into something called the Bitcoin realized cap. Basically, this metric measures Bitcoin's value by taking into account the last price at which each coin moved on the blockchain. Think of it this way. The last time a coin was transferred was likely the last time it changed hands, so that price becomes its cost basis. The realized cap, then, is the total of these cost bases for all Bitcoins in circulation. In simpler terms, it shows the total capital that investors have put into Bitcoin. This makes it a handy tool for tracking whether money is flowing into or out of Bitcoin. Moreover, Glassnode shared a chart that shows the Bitcoin realized cap trend over the past few years. Earlier, when Bitcoin was on a rally towards a new all-time high, the realized cap was shooting up fast, which meant a lot of money was pouring into Bitcoin. But lately, this upward trend has slowed down. The realized cap is still growing and even hitting new highs, but the increase is much smaller compared to before. The report puts it this way. Right now, the rate at which new capital is flowing into the Bitcoin network has slowed down considerably from its peak as the market digests the recently distributed supply. Another chart helps illustrate this change better. When investors sell Bitcoin at a net profit, the realized cap goes up because there's demand to buy at higher prices. Conversely, the metric drops when investors sell at a loss, since coins bought for more money are now sold for less, reducing the total investment in Bitcoin. The Bitcoin net realized profit-loss graph shows that the market saw a lot of profits when the ETH was hit. Since then, however, this metric has cooled off a lot, highlighting the lower demand in the sector. To give a recent example, Bitcoin's price surpassed $71,000 yesterday, but it dropped back down to $70,200 today. This fluctuation underscores the current reduced demand and how the market is responding to it. Oh, by the way, if you're new to Bitcoin and still feeling a bit unsure about what it is and how it works, you should definitely check out our Bitcoin explanation video in our video tag right here. And well, next, huge news about presidential campaign. President Biden's administration is navigating a complex stance on the FIT21 crypto bill. While they oppose the bill's current form due to concerns over insufficient consumer and investor protections, they are also willing to engage with Congress to refine the legislation. This mixed approach reflects both caution and a desire to create a balanced regulatory environment for digital assets. On the other hand, SEC Chair Gary Gensler isn't holding back when it comes to his thoughts on the FIT21 crypto bill. He's pretty clear about his stance. He's not a fan. Gensler is pushing back hard against this new legislation that Congress is gearing up to vote on, which aims to clear up how digital assets like cryptocurrencies should be regulated. Gensler kicked things off with a bit of a history lesson, explaining that the SEC was established nearly 90 years ago to protect the public, and he firmly believes these old rules are still just as relevant today, even for modern assets like crypto. He argues that sticking to these tried-and-true regulations is crucial because they've built trust and fostered innovation over the years. His main beef with the FIT21 bill is that it could create new regulatory gaps, putting American investors at immeasurable risk. Gensler fears the bill would let crypto companies self-certify their products as decentralized or classify them as digital commodities, effectively dodging SEC oversight. He's worried that this could open the floodgates for fraudulent schemes to slip through the cracks. To drive his point home, Gensler highlighted the importance of the Howey test, an 80-year-old method the SEC uses to determine if an asset is a security. He insists this test is still the best tool for regulating crypto, pointing to cases like the one against Ripple as proof. In contrast, FIT21's approach, which focuses on the technology behind the assets rather than using established criteria, doesn't sit well with him. The House of Representatives is set to vote on FIT21 soon, marking a pivotal moment for crypto regulation in the U.S. While Gensler is sticking to his guns, many are eager to see a more modern regulatory framework that better fits today's digital asset landscape. By the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Next, we had a big question right there. Is the altcoin season about to kick into high gear? With Bitcoin hitting a record high before a pullback, many believe it's time for altcoins to shine. In the next 2 weeks, key votes on legislation and an Ethereum ETF will shape the market. The global crypto market is at $2.73 trillion, with Ethereum leading a bullish trend. Historically, Bitcoin's surge precedes altcoin gains during consolidation phases. Analysts predict a rally, with altcoins like Ethereum breaking out of patterns. However, only 37% of top altcoins have outperformed Bitcoin in the past 90 days, dampening enthusiasm. Investors are advised to brace for volatility as the market awaits crucial decisions. Whether this leads to a maniac phase or more consolidation remains to be seen. Additionally, looks like Metaplanet is stealing the show in Japan. It's being called Asia's MicroStrategy because its stock is on fire, outpacing all other Japanese stocks by a long shot. The Tokyo Stock Exchange had to hit the pause button on trading for 2 days straight because Metaplanet's shares were skyrocketing. They shot up a crazy 158% in just 1 week, making it the hottest stock in Japan. Right now, each share of Metaplanet is going for 93 Japanese yen, which is up a whopping 127% in just the last 2 days. That's huge. The surge was so intense that it triggered circuit breakers on the Tokyo Stock Exchange, halting trading multiple times in the past week. And get this, it's getting pretty close to hitting a $1 billion market cap, which is no small feat. So why all the buzz? Well, Metaplanet seems to be taking a page out of MicroStrategy's playbook by diving headfirst into Bitcoin. Since they announced their Bitcoin investment strategy in April, they've managed to grab hold of 117.7 Bitcoin, which is worth a cool $7.2 million. And guess what? Their stock price has shot up by a whopping 389% since then. Talk about a Bitcoin boost. But here's the kicker. They're not just doing this for fun. They're actually trying to protect themselves against Japan's economic struggles. With Japan drowning in debt and their currency, the yen, taking a nosedive against the dollar, it's no wonder Metaplanet sees Bitcoin as a lifeline. Japan's debt-to-GDP ratio is a whopping 261%, the worst among developed countries. And get this, the yen has dropped more than 34% against the dollar since the beginning of 2021. That's a big hit. Meanwhile, Bitcoin has been holding strong, up nearly 190% against the yen in the last year. It's like a beacon of hope in a sea of economic turmoil. The only downside? Well, if you're not in Japan, you might have a tough time getting in on the action. Metaplanet is only listed on the Tokyo Stock Exchange, locking out international investors for now. But there might be a glimmer of hope on the horizon. Arnab Naskar, one of the brains behind security token platform Stoker, has hinted at tokenizing Metaplanet shares on the Bitcoin-based Liquid network. That could open the door for folks outside Japan to get in on the action, just like they did with MicroStrategy. Keep your eyes peeled. Likewise, guess what? Binance just scored a big win in Florida. The appeals court there overturned a permanent ban on the exchange, saying regulators didn't play by the rules when they slapped the ban on. This victory for Binance comes after its former CEO, Changpeng Zhao, got caught up in some legal trouble. But get this. Even though Zhao got sentenced to 4 months in the slammer for money laundering charges, it's way less than what the prosecutors wanted. As part of the deal, Binance has to cough up a hefty $4.3 billion in fines, with Zhao pitching in $50 million from his own pocket. And here's the kicker. Despite all this legal drama, Binance's own cryptocurrency, BNB, is on fire. It's been riding the wave of the overall market uptrend, almost hitting its all-time high from the 2021 bull run. Even though trading volume has dipped recently, BNB has still made some serious gains, jumping up 4% in the last month and a whopping 7% just last week. Now its price is hovering around $620, not far off from its record high. But wait, there's more. The court's decision isn't the end of Binance's regulatory headaches. Alaska's banking division gave them a thumbs down on renewing their license to operate in the state. Looks like they're in for a bumpy ride, but for now, Binance and BNB are still riding high in the crypto world. Next, news about stablecoin developments. You won't believe it. Tether just whipped up another $1 billion worth of USDT tokens on Ethereum. People are buzzing about whether this move is a setup for a big market boom, especially with the SEC expected to drop a decision on an Ethereum ETF any day now. Tether's CEO, Paulo Arduino, hopped on X, formerly Twitter, to clear the air, saying this batch is for inventory replenishment and not yet in circulation. But the real question is, will this influx of cash pump up the market before the ETF news hits? Ivan Sherbakov, CEO of Crypto Robotics, seems to think so, betting that this liquidity surge will kick things into high gear. Tether's been on a tear lately, with its market cap soaring past $111 billion, dominating nearly 70% of the stablecoin market. But not everyone's cheering. Deutsche Bank analysts are waving red flags about Tether's growing power and lack of transparency, sparking some heated debates among analysts and investors. It's a wild ride in the crypto world, and Tether's stirring up quite the storm with its billion-dollar moves. Eventually, speaking of Ethereum ETFs, BlackRock, Grayscale, and Bitwise shook things up by tweaking their forms for Ethereum ETFs, ditching the staking provisions to smooth out regulatory wrinkles. This move comes as part of a broader industry trend to play nice with regulators and boost ETF approval chances. Others like Fidelity and VanEck followed suit, amending their proposals too. Investors got hyped when Bloomberg analysts upped the odds of ETF approval to 75%, causing a frenzy in the market. Ether shot up by 17%, and Bitcoin hit $71,000 again, signaling the market's enthusiasm. Analysts even speculate that political forces might be at play, influencing the SEC's shifting stance on Ethereum ETFs. It's all part of the wild ride in crypto regulation.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.